What's going on, everybody? It's the Bulls and the Bears here with a weekly recap video for the wheel strategy, as well as a monthly recap of February. Although it's still February, most of next week is March. And since I play by the week with weekly expiration contracts, I'm going to consider next week as March profits. So that means February is all wrapped up. So we'll talk about how February went, where the total profits stood, and the kind of all the trades that took place. But first, we got to recap this week since it's brand new. What happened this week? Well, overall, as a whole, the market has come down, and as did my account. $26,633 is where we stand. That's about like $300 less than where we were last week, or like the past couple weeks, I would say. Back when my CVS position was doing very well, around $400. Now it's only $136, so right then and there, it's like about a $300 drop in my account. And then you have this Intel position up here that says it's down $219, or 600% on this cash secured put. I sold 3 of them, that's why. Sold 3 for 12 cents, now they're worth 85 cents because Intel has collapsed a little bit. So this $219 unrealized loss, that's going to translate into a loss on my share position. Once I'm assigned and I have 300 shares in my account, then I should be down around the same amount. So this loss will kind of just carry over from the contracts, the option contracts, into the share position. And then aside from that, I'm holding a Google put at the 86 strike. I sold one for 51 cents on Friday, and I guess I'm up 20% so far. So these are my open positions. There's quite a bit that's happened that was opened and closed and done with, so we'll talk about all that. But this is where the account stands. And CVS in particular, which we'll talk about, is kind of making me pull my hair out a little bit because, as if you've been watching my videos, you know I had a chance to get out for over $400 profit, and now I'm watching it dwindle down to nothing. But we sold a call. We'll be able to adjust our cost basis, and we'll do all that. But first, we are going to talk about the S&P 500 and the market as a whole. Here's the daily chart of the S&P 500, and you can see just how deadly it's been this week. We had this big bull flag forming since the start of the year, pretty much. Start of the year, we had this really big rally, broke through this major trend, the mother of all trends, and we kind of chilled up here. Every time I thought we were selling off, we'd come back up, and after a few days, I realized, oh, this is a bull flag that's forming. And we were in it for quite a bit, maybe a couple weeks. It was only a matter of time before we broke out to the upside or to the downside, and it looks like it was to the downside. And although we had these bottoming wicks, you know, we'd sell off, but then we'd have these big bottoming wicks because the bulls would kind of come back. We had one here, and then we had one here as well, and even here on Friday. So the bulls do seem to show up at the last minute, but overall, we're still going down. We're gapping down. We're selling off. We are, even after we pushed up on Thursday with this big lower wick, we gapped down completely on Friday, erasing all that push, and then sold off even more. So very bearish this past week or two. And now we're right back to kind of where we were before we broke out of this big trend. We're still above it, though. We are still above the trend. You can see we actually sold off into it. We got back under this trend line into the trend, and but we were pushed back out of it, and we closed above it, and it basically held as support, which was prior resistance. It turned into support. So there is that going for the bulls. There is that this trend is holding up as support, and maybe this could be a bottom, possibly. 4,000 was kind of that mark before, but that gave way, and now we're looking at this big trend line. Is that going to hold up and keep us afloat? I personally, like I've been saying, think that we're going to get back below this trend line for good and head back to these levels here, at least within the next few weeks. I said by the middle of March, we'll be back down to like 3,800. So that's where I personally think is going to happen. That's what seems to be going on right now. A lot of selling right now. But you got to give the bulls some credit. They are buying these dips up. And these big lower wicks mean the bulls aren't completely dead. And this big trend line is holding a support. So we'll have to just see what happens there. But at the end of the day, this big sell-off did hurt the wheel. When you're trading the wheel, you want stocks and market to go up because you're short puts or you're long shares. And when the market goes up, that benefits both of those. When it goes down, it's a bad thing. So with that, we're going to go into the wheel, start with CVS. So let's bring the graphic up here. Here is really the wheel as a whole right now. February profits, $863.84. That is the final total on February. And you can see the positions that I still have open. CVS shares, Intel shares now, since I'm getting assigned on those. And then a Google cash secured put. We already looked at that. We'll get into it a little further. But 863 on the month is pretty good. It didn't quite wipe away the loss from last month, but we're very close. We're only like $100 down on the year. So in March, we should be able to clear that loss completely and start going in the right direction. So let's look at CVS first. So here's CVS. I've been in this position for a couple weeks now. I originally got assigned at 86, and through selling puts and calls, my adjusted cost basis or my break even, same thing. I have a break even written out here, but it's the same thing as the adjusted cost basis. Break even seems to roll off the tongue better. My break even is now 84.72. So I've collected some of that cost back to where now my break even is at 84.72 as opposed to 86 had I just bought the shares outright without selling options. But we're rolling over. CVS is rolling over. We're at 85.77. We were above 90. This hurts because I had a chance to get out up here and I didn't. And it's rolling over and my profits are dwindling, as you saw in the positions window. I'm only up like $135 now as opposed to $400. But I'm still in a good spot. The share price is still above my break even. So that means I can pretty much sell any call I want and it'll still be in profit territory. I don't have to go far out of the money to do it either. I can sell an at the money call and I'll still be in profit territory and collect good premium because that's how good my cost basis or my break even is on the chart. But that advantage is going away as we sell off and get closer and closer to my break even. And if we get below my break even, well, that's when things get sad. But right now, we're hanging in there, but just barely. I did sell a call last week at the 88 strike. This was an in-the-money call because I was fearful that we were going to keep dropping. And that's what ended up happening. And when you're fearful of the stock dropping, you can sell an in-the-money call because if you're right, the stock will sell off. That in-the-money call will become out of the money, and then it expires worthless. And you get to keep that really good premium, that in-the-money premium that you'd get. And that's what I did here. I got $1.25 for the call because it was in the money. And it did, in fact, sell off. So I got to keep the full $1.25, which means I can reduce my break even further by the full $1.25 premium. So let's do that. Shrink this down a little bit so you'll see the difference. So I'm going to go into this line, edit the coordinates here. So my original or my latest break even was 84.72. After the call that I just sold, it is now adjusted down to 83.43, a full $1.25 better. I'm sorry, 83.47. There we go. Boom. That's a big drop in the break-even price. That separates me from the current price even further and gives me that much of a buffer. So that's great to see. Now if I zoom out on the weekly chart, we can see where my new break-even stands relative to the chart. And it's at a pretty good level. I mean, now we got these candles down here back in 2021 that can act as support. That's kind of where my break even sits right now. Even if it does get through my break even, there's still a bottom over here around $80 to $82 that could possibly hold up as well. So in the end, I do think I'm in a good position. And in the end, I do think that this could actually work out better than I kind of hoped for. I mean, I keep saying I wish I got out up here at like $89 and made my $400 profit. But, you know, given that this is a good area of support, let's zoom out a little bit. Like say if, you know, CVS kind of sits right here, maybe it bounces back up, sells back off, kind of goes sideways, and then maybe starts to trend up. I mean, all throughout this time, like right here, this whole time, which is like a month or two, I can sell calls really nicely. Like I'm in such a good spot position-wise, like break-even-wise, that I can sell really nice calls every step of the way. So if it does bottom out here, go sideways, you know, I can keep selling at-the-money calls or slightly out-of-the-money calls for a good premium and just continue to, you know, recoup my costs. And if after a few weeks it does start to go back up and I do get my assignment price up here and my exit price around $90, which is what I'm kind of hoping for, well, then I'll get the exit at 90 and have all that extra call premium in the meantime that I'm collecting. $125 just collected this week. So there is a world where this turns out into becoming a really big trade, because I get such a good opportunity to sell calls every single week before it pushes back up. The only downside will be if it really does decide to crash through all the support and go down to like mid 70s. Then that's really tough and we're in trouble. But if it can try to kind of just chill around here, chill around this support area, I mean, I think I can take some serious advantage of call selling, which would be really nice. So first thing on Monday, I'm going to be looking to sell a call, and I can sell whatever call I want because I am in the money. I am in the profit territory. I'll probably look to sell maybe the 87 call, maybe not at the money. We'll have to see where we open on Monday, how things are looking, but I'll probably keep my call tight, not too far out of the money, maybe at the money, depending. But yeah, we'll see. But I'll post on Twitter whatever I do. If you want to follow me there, link in the description. Anything I do, I post there right away. That way you don't have to wait for these videos. So I'll erase that call line at my new adjusted break-even price, and we're good to go with this one. Moving on to Intel. This is one that I sold some puts on. Sold 3 puts at the 26 strike. That was on Tuesday, and well, it just kept selling off. I mean, we dropped over 5% on Tuesday, another 2% on Wednesday, slightly up on Thursday, but then right back down almost 2% on Friday. And we closed at 25.14. I sold puts at the 26 strike, so I'm getting assigned. Now, I collected 12 cents for selling these puts, so my break even will be a little bit lower than the 26 strike. Instead of having a cost basis of 26, I'm going to have a cost basis, or an adjusted cost basis, or a break even of 25.88, which is the 26 minus the 12 cents I collected. So that's my cost basis. Now I'm going to change the wording, so I'm going to say break even. Whoops. Break even on 300 shares. I sold 3 puts. So that means I'm going to get 300 shares because the price of the stock is cheap. So I can afford to sell multiple puts and collect multiple lots of 100 shares. So that's my adjusted cost basis. That's my break even. And if I zoom out on the weekly chart, you can kind of see where it stands. Since over the past few months, this obviously is an area where it's been holding up. Now, the more times it tests it, the more opportunity it has to break it. But if I zoom out even further, you can see where my blue line is, my break even, and where it stands to prior chart history. It seems to be a bottom. I mean, this is back in 2015. We found some support down here in the 25 region, even way over here, April 2014, March 2014. We're talking like almost 10 years ago. It was trying to find some bottoms over there. So, fundamentally, the company is kind of struggling, but I just feel like at this price point, it's worth taking a stab at. Chart-wise, it looks good. So here I am with 300 shares. I think it's a pretty good area. We're going to try to sell calls first thing on Monday. Google is a position that I just opened on Friday because it was selling off quite a bit. And I want a piece of Google in this region. And it was giving it to me. It just kept selling off below $90. I was like, okay, I need to sell a put in this region. I know I can get a good strike. I can take advantage of this big drop. I got the 86 strike and I got 51 cents for it. It expires next week. If you go out on the weekly chart, you can see why I want to be in this area. It's a clear demand zone. Had support back in 2020, 2021. Had support in October. Had support in January. Coming back down. So I want some shares in this region. I think $86 is a great long-term cost basis on this name. Hopefully it doesn't have to be that long-term. I'll take a few weeks and it turns around if I get assigned. But overall, it's just a really good spot for me to get in. And that's what I have open right now. So it's still going. I'm up like 20% on it. I wouldn't mind getting assigned, but if I don't, then I'll keep the $50. I'll be happy with that too. But I think it's a really good spot. The 86 strike I was able to get. Now, in order to get this strike, I actually had to close another position. So now we're going to get into the positions that I closed. Occidental Petroleum over here, this is one that I sold a put against at the 59 strike. And oddly enough, we closed right at 59, I guess 58.98. So 2 cents below my strike. And I probably would have been assigned. But I got rid of it. I closed it early. I closed it. This was weird because on Friday we were below the strike. This is Friday's price action. So we opened below. We were way down here. It looked like I was going to get assigned. We pushed up strongly. And this is actually when I closed it because at this point, Google was selling off. And getting into Google at 86, which is where I sold my put, seemed way more attractive than getting into Occidental. I really wanted to take advantage of Google. So I needed to unload a position because my buying power was all tied up. And this was the only position that was offering me a chance to get out. On this push up, my contract went from red and in the money down to in the green, about at the money. You know, the put decay on 1 day left to expiration is pretty severe. So on this push up, the contract decayed quite a bit, and I was actually able to close it for $30. I bought it back for $30 after selling it for $40. That ended up being a $10 profit on that position. Again, it wasn't intentionally for the profit. That wasn't the main driver of closing it. I wasn't saying, oh, I'm up quite a bit on this put, I'm going to close it. It was, I want to get in Google and I need to close something. And this was the best opportunity. So I took the $10 profit and I got out of this in order to get into Google. And I want to be back on this chart because I actually did another position on Google this month. This was, I sold the 90 strike, which was right up here. So I sold this earlier in the week, and then I realized that if I got assigned on all the positions that I had opened, it would be using my margin. Like, I don't have enough cash to back up all the positions I have open, and I don't want to use margin. I only want to have my positions backed by cash only. So this would infringe on that. This would mean I would be using more than cash, so I had to get rid of it. I had to get rid of this position, or any position. This was the only one at the time that that gave me the opportunity to get out for a profit, so I closed it. It was a $6 profit. It's really not worth talking about. It was just like, oh, I shouldn't be in this because of my buying power. Let me close it for a small profit. So that was that. Back to Intel, there was actually another position I opened on this name earlier in the week. I opened the 2550, which is right here. So I sold this during the week when Intel was really selling off because it was just looking bad and I had some extra buying power and I wanted to try to get another 100 shares at a lower strike. I was going to get 300 at 26, as I already did. So I figured maybe let's try to get another 100 at a lower price of 25.50. That way I can get a better cost basis. I'll have 400 shares instead of 300, and I'm fine with that because I had the extra buying power. After I sold it, after I sold that put, I think it was on this moment here, we had this really big spike up. It might have been that. It was Intel pushed up quite a bit after I sold the put, and I was actually able to close it for a pretty good profit. I decided to take it instead of keeping it. And now if I kept it, I would have gotten assigned on those on that put, but I didn't keep it and I didn't reopen it. I just closed it after it decayed quite a bit. I sold it for 40 cents because it was in the money at the time, and I bought it back for 11 cents. So it was a $29 profit on that position, 72.5% capture of the premium. So that ended up just kind of being a quick trade. It wasn't intended to be like that. I wanted to get assigned and lower my break even further by getting assigned at a lower strike. But it gave me the opportunity to close it for a good profit, and I did. And if I want to sell another put, I can because I still have that buying power left. And now I can probably get an even better strike around 25. So I might actually do that next week, sell another put, just one more on Intel at 25 or so. That'll help my break even. And the last thing profit-wise was just an actual day trade on SPX. So let's go to the 5-day look. This was on Tuesday. So we'll take a look at Tuesday here. It's a 5-minute chart on Tuesday. We had this massive gap down and this massive sell-off, and we were down like 2%, and we were approaching the key 4,000 point mark, like right around here. And I figured if after being down 2%, we actually crack 4,000, we're probably going to pop back up because it's that significant of a support level. We did crack it by about 7 points. I think we got down to 39.95, so 5 points. And I bought a call on SPY, not SPX. I bought a call on SPY because it was cheaper. I only spent like $40 on it, $42. So not a big risk at all, 42 bucks. I figured it was worth a shot. And we did pop up, and it was a same-day contract. Premiums jumped up quite a bit on that pop, and I closed it for $30 profit, or $72 on the contract. ended up being a 71% gain on the position. So had I did lean into it, I mean, that's a pretty good gain on a trade, a 70% gain on a trade. It was just small dollar amounts. I bought it for $42, sold it for $72. Nothing crazy, but it was an opportunity worth taking. I made 30 bucks. I'm happy with that. So now we're just going to take a look at February as a whole before we wrap up the video. I just talked about all of this highlighted section. This is the final week of February. I just talked about that, my SPY call, my Google put that I closed early, my Intel put that I closed early, and my Occidental Petroleum put that I also closed early, for a total of $75 profit, realized profit on the week. Before that, the prior 3 weeks, just some cash secured puts that I opened and closed. I mean, I started the month with a couple Activision positions that totaled $178 on just 2 put plays on Activision. That was nice. I played Google a couple times more, $67 there, and a Pfizer position for an extra 12 bucks. As a whole, between all the cash secured puts and then one SPY day trade, it was $332 right there in profits. If you want to look at just the wheel and eliminate that day trade and just look at cash secured puts, it was a total of $302 profit on the month. Then you factor in credit spreads, which is what I was still doing early in the month, but then I quickly got rid of and stopped doing, but the profits still count, and I was able to get $531 right here for the month of February in credit spreads. So add it all up, you get $863.84 profit on the month. That's 3.3% gain on the account. And if I scroll up, this is January's stuff. So I lost $992 in January. So not quite erased. I haven't quite erased that. I'm down still $128 on the year. But looking forward in March, I mean, I can get that easily. I made $300 this month in just cash secured puts alone that expired worthless or that I closed early. So if I just do that again, which seems to be my baseline, I'll get that loss back and then some, and then we'll be moving forward in the right direction. So that's it. That's the video. That's the weekly recap. That's the monthly recap. Right now we have an open put position on Google that's still going. Got the 86 strike on that one. I have CVS going. I'm going to be able to sell a covered call first thing on Monday on that one. And then Intel, I'll have 300 shares of. I'll look to sell a covered call if the premium is paying enough. I will also possibly look to sell another put against it to get 400 total shares and, you know, get that final 100 share lot at a much better price at around maybe 25 or 24.50. That way, if you average it all together, my break even will improve that much more. We'll have to see what happens. But that's it, guys. Thank you all for watching. If you enjoyed, hit that like button, subscribe for more content, and I'll see you all next time.